Hi there. Welcome to this video where we'll be discussing everything you need to know about trading crypto futures. I'm an expert in this field, and I'm excited to share my knowledge with you. First, let's start with the basics. Crypto futures are contracts that allow you to buy or sell a specific cryptocurrency at a predetermined price and time in the future. These contracts are traded on exchanges, just like stocks or other commodities. One of the main benefits of trading crypto futures is that you can make money in both a rising and falling market. If you believe that the price of a cryptocurrency will go up, you can buy a futures contract to lock in that price. If the price goes up, you can sell the contract at a profit. Alternatively, if you think the price will go down, you can sell a futures contract at the current price and then buy it back at a lower price, again making a profit. Another benefit of trading crypto futures is that you can use leverage to increase your potential profits. Leverage allows you to borrow money from the exchange to trade with, increasing the amount of cryptocurrency you can control with your initial investment. However, it's important to use leverage wisely, as it can also increase your potential losses. When trading crypto futures, it's important to do your research and have a solid understanding of the market. This includes understanding the factors that can affect the price of a cryptocurrency, such as news events, regulatory changes, and overall market sentiment. In addition to researching the market, it's also important to have a solid trading strategy. This includes setting clear entry and exit points, managing your risk, and monitoring your trades closely. Now, for the bonus point, how to trade crypto futures. The first step is to choose an exchange that offers futures trading for the cryptocurrencies you're interested in. Next, you'll need to create an account and fund it with the amount you want to invest. Once you're set up, you can start placing orders for futures contracts. When placing an order, you'll need to specify the amount you want to trade, the cryptocurrency you want to trade, and the expiration date of the contract. You can also set limit orders to buy or sell at a specific price, or stop orders to automatically close a position if the price reaches a certain level. In conclusion, trading crypto futures can be a lucrative way to make money in the cryptocurrency market. By doing your research, developing a solid trading strategy, and using leverage wisely, you can maximize your potential profits while minimizing your risks. Thanks for watching, and happy trading!